Hello, everyone, and welcome to a new episode of the Executive Academy Podcast. My guest today is Igor Pejic. Igor Pejic is a leading voice in tech-driven shifts, especially in finance and banking. He has held multiple management positions in companies, in payments departments, and his award-winning book, Blockchain Babel, brought blockchain to the boardroom. He currently has his new book that just came out. I think it was in May, right?
Correct, yeah.
And this is the book, Big Tech in Finance. This is something we will be talking about today. So, Igor, let me welcome you to the Executive Academy Podcast.
Officially. Thank you very much for having me. It's a pleasure to be with you.
Thanks. And now speaking about big tech, about finance, and we see a lot of those big words being used. Big tech, big banking, big government. What's so big about it that we have to use the capital B in these terms? How do these technologies change and influence our world?
That's actually a great question because it seems counterintuitive, doesn't it? Because all the time we hear stories of entrepreneurs, of people like Michael Dell or Jeff Bezos working their way from the garages, disrupting and conquering mega industries. And we hear about them because they are so exceptional, right? Because at the end of the day, if we look at the history of innovation and the history of disruption, we see that mostly disruption happens either by market-dominating players or it happens by diversifying market entrants. This might sound a bit abstract, so let me give you an example. When Apple decided that it would enter the phone market, back then it was not the smartphone market, but the phone market, it was already an established player in the computing business. What happened is that basically the phone became a little computer in your pocket, so the core competencies that you needed to succeed in an industry changed, and Apple anticipated that, and this is why they were able to conquer such a mega industry in communication. So this is one thing. The second thing is that today, as you mentioned, big is not just good, it's better than it used to be in the past because we have such a strong acceleration of technology. And I don't mean just an acceleration in technological development, but an acceleration of technological adoption. If you look, again, at different technologies, if you look at the first airplane, it took about 68 years until it reached 50 million users, 50 million passengers. If you fast forward to the automobile or the phone or the fax machine, it always got shorter, this time frame. Twitter took only 1.5 years to reach 50 million users, and Pokemon Go, which is a kind of a smartphone app where you catch virtual monsters, took 19 days, right, to reach 50 million users. We had this huge acceleration, which is hardly possible by mere organic growth, by organic disruption. And this is why it's so important to talk about companies that can leverage operational excellence, deep pockets, that can leverage huge customer bases, whether that's their own or some partners' customer bases. And this is where we come to big tech, because big tech, I believe, is the category of companies that has aggregated a power and wealth that we have never seen in the history, not even in the time of Carnegie or Rockefeller, or these robber barons, we call them, the most powerful people in business, because today big tech is much, much stronger than them, much more wealthier. It's globally dominant, right? So you have especially what I call the big five. This is for me big tech. So you have Meta, which is Facebook's parent company. You have Alphabet, which is Google's parent company. You have Microsoft, Apple, Amazon. So these are the big five. They have, as I said, managed to break into not just one, but multiple mega industries, and also stay there and create a monopoly or duopoly. Advertising, it's Facebook and Google. Retailing, it's Amazon, and then there's nothing else. And then after a long time, you get other retailers. You have the smartphone market where you have operating systems, it's iOS and Android, so Apple and Google again. So it's all monopolies, duopolies. And this is why big tech is so fascinating and so dominant today. And one last thought, where you see this most is if you look at the corporate valuations, lists of corporate valuations. Go back 10 years ago, under the top 10 biggest companies, you would get oil companies, energy giants, perhaps a bank or two pharma companies. Today, 7 out of the 10 are big techs. So we have the 5 American ones plus 2 Chinese ones. And this shows you that they are just extreme in the power and influence that they have.
Now, you also mentioned in your book and talk about big government, big banking. What does that refer to? You just explained big tech. What are these other two terms?
Yeah, that's also a very important thing to say, that we also have aggregation tendencies there. So with banking, it's pretty clear, right? You just look at the number of banks, especially the US, number of community banks that have been reduced over the last years and decades. So we have an aggregation. You have big giants, and it's this too big to fail mentality, right? The bigger, the better. At the same time, when we talk about big government, we see that with new technologies, governments across the world are trying also to expand their power, their influence, whether that be by very harsh regulation in the European Union, or whether that be also through regulators and central banks. Especially when we talk about blockchain and digital currencies, we see now more and more central banks trying to issue their own currency on a ledger that was initially supposed to be decentralized. And the best example here is, of course, China and the People's Bank of China that are working on a digital yuan, or the ECNY as it's basically a digital currency based on blockchain, but issued by a central bank, and therefore increasing their influence and their power.
Do you think this trend of governments and banks picking up digital currencies and putting them on blockchain will continue in other governments, or is everybody looking at how China is doing it and learning? What do you think about that?
There is a clear trend. If you look at figures by the BIS, which is the Bank of International Settlement, this is the central bank of central banks, they do regularly studies, and they said that 9 out of 10, sometimes even more, central banks are somehow working on a CBDC, on a central bank digital currency. You have some being live, which is in smaller economies, but of course the whole world is looking at China, at Europe, UK, and the US, four markets. Now, UK, Europe, US is a completely different thing than China, right? Here you have a very strong skepticism governmental control, even though you have a very working and independent distribution of powers, right? So you have independent executive branch and so on. But still, people are very skeptical. They're very aware of their privacy. And central bank digital currency, at the end of the day, will be a very, very big topic. Government overreach, government interference. It's not just about knowing who is sending money to whom, but it's also the possibility to program money. Especially when we talk about blockchain, it's possible to program money to limit its potential use cases, to say you're only allowed, so you get a government handout, for example, you get €1,000, but you're only allowed to use this for food at a supermarket. So there's a high skepticism, and then you also have skepticism from government side and from central bank side, which has to do with financial stability. So they are very cautious. And I don't think so much that we will learn a lot from China, because it's a completely different system. Replicate this one by one, minus their mistakes. But I think it will be going that direction. The question is when it will come and at which scale. I don't see fiat currency, which is government-issued money, or even currencies or.
Yeah, that was my next question, actually, when you were talking about blockchain. Let's say, imagine a far future, or I don't know how far we can look into the world, which is changing every day. But that was my next question. Will central government digital currency ever replace the fiat currency? Just mentioned it will not. And another naive question, maybe, but I would like your expert opinion on that, is about how does it work? We have fiscal policies by governments. Is this blockchain and digital currencies replicating the existing world, or does it work a little bit different? How will that be?
Yeah, there's a number of questions in there. Maybe just to start with, So I wouldn't say it's fiat money versus central bank digital currency because it's the same, right? So central bank digital currency, when a central bank issues this, it's a central bank money. It's just like cash, just like reserve money. This is issued by the central bank, which means if I hold that, this is on the liability side of the central bank's balance sheet. So I would say it's pretty much the same, but coming out to the last question, it is more advanced, right? So it's much more than that. So especially when we compare it to cash, it's completely different. Cash is anonymous, it's printed, it has costs, which, anonymity can be a good thing, bad thing, and so on, because there's legitimate reasons why governments should actually try to control the flow of money. But it's also much more powerful. As I mentioned earlier, when you put money on the blockchain, first of all, it becomes more efficient, right? So settlement clearance, which is basically the movement of money between corporations and institutions, becomes much, much more efficient. It's cheaper, it's faster, and so on. At the same time, it also gives you new functionalities because money on the blockchain becomes programmable. As I said, you can tell me, okay, you are allowed to use this 10 euro bill, but you're only allowed to use it in this and that way. Also use this money because it's already tokenized, so it means it's recorded on a blockchain, so you can use it in all kinds of advanced blockchain concepts, which is here, but it's summarized under the umbrella DeFi or decentralized finance, which means I can take my money and I can lock it in all kinds of different algorithms that are basically doing a lot of financial transactions in a very automatic way.
Mm-hmm. Now, my next question is, we mentioned quite a bit of those new tech like decentralized finance, currencies. We haven't mentioned smart contracts, which something you all Web3, all those different technologies. I don't know, please mention anything else that is relevant. Is there any point where they're all converging, or maybe some of them, and how is that going to shape or how companies develop and how we grow?
There definitely will be convergence, for sure. I would even say that some concepts are built on others. Talked about smart contracts. Maybe since I didn't explain it, this is basically a way of making things happen automatically on the blockchain. So it's like coding an if-then scenario. So, for example, let's say I own bitcoins, and if the price drops under $20,000, sell it automatically. Very primitive smart contracts, just to explain what we're talking about. Then we have concepts such as decentralized autonomous organizations, also known as DAOs. Are basically companies that don't have any staff, don't have any status. They exist only by smart contracts, which means that DAOs require concepts such as smart contracts, such as distributed ledgers, such as tokens. So they are already converging and merging those things. So there will definitely be convergence. What I also see is convergence of digital assets and digital technologies with traditional assets, traditional systems. And this is what makes it a bit tricky and also, I would say, a bit dangerous. So if, for example, bring those unregulated, or let's say partly unregulated digital assets and merge it with a traditional financial system, it brings some kind of systemic risk in this system. And this is also why many governments across the world are still struggling to regulate the digital asset space because of spillover effects on traditional finance.
What prevents them from being faster? Is it skills? Capacity?
Well, there's a lot of topics why, or a lot of reasons why governments are so, in our perception, slow moving. One thing is, of course, the regulatory process. If you look at the European levels, it has to pass, the Commission, the Parliament, member states, ratifications, and these are all take time by and of themselves. And I'm mentioning the EU because it's actually the best example in terms of regulation, in terms of crypto regulation. Markets in crypto assets, passed this April by the European Parliament. and it is the most comprehensive form of regulation in the crypto space. And it's 400 pages, a lot of things I disagree with, but a lot of very, very good things in there. At the same time, it's already partly outdated, right? Because the tech is moving so quickly that it's very, very difficult to reconcile this long and fast-moving legislative process with, of course, this new tech. Book, not mine, but another one good. It's called Exponential Gap. It's basically, the hypothesis is that technologies today are moving exponentially faster than our institutions allow, and this is why we are in a lot of trouble that we're having. So all of the societal troubles that we have today are basically a result of regulators not moving as fast as the technology.
When you mentioned Mika, I just missed that. Where is this institution based? Is it a European Union?
It's not an institution, it's a regulation, so it's a European Union law, more or less, which is a very, very good thing because it basically unifies the whole market. So I can, for example, apply for a crypto license in Germany, but then I can passport this license to Portugal or Greece or wherever I want to, which basically creates one market and makes it much, much easier for new incumbents, new tech companies to grow because you don't have regulatory hoops in every member state.
Now, I'll go back and forth. That's how we'll be talking about these things. I understood during your explanation while you were talking that these new technologies will not replace the old ones. They will probably be continue to walk together. Maybe there will be some merging of tech, traditional and the new normal. So, what do you think? Will there be any time when some of the existing tech will be completely, say, obsolete by these new technologies? Why are they good? Why are we not accepting them so fast? And you mentioned there is regulations and everything, but will there be a day when we will overcome these problems, regulate things, and start a new chapter?
Mm-hmm. Yep, there's a lot to unpack here as well because there's many factors influencing actually the pace of technological progress. I think what's very important at the beginning to mention is that you have two types, I would say, of technologies. Advances. One is the narrow technological advance, which is like I have a server, it's 1 terabyte, I get a server with 2 terabytes. It's very, there's no question that I will replace them, so the old technology will get basically obsolete very quickly. It's the same also with paper maps. If you think paper maps, so, Google Maps and some other GPS services came in, and it took a long time. It was not as clear as the 1-2 terabyte thing, but at the end of the day, substitution happened then very fast. With blockchain, but also artificial intelligence, robotics, quantum computing. So these are the big buzzwords, if you want, or the big technologies of our time. It's much more complex. They are what we call GPTs, or general purpose technologies. Think of electricity, or the steam engine, or the combustion engine, or proliferation of semiconductors. So these were all big technological breakthroughs that did not just impact one use case or one department, not even one company or industry, but they impact multiple segments of an economy, right? So blockchain can be used anywhere. We're talking a lot about finance, but it's used in supply chain, it can be used in energy, it can be used in identity, in voting, and having elections. So it's a widespread technology. And this means that it has so many different use cases that they are maturing at a different kind of pace. And also, another thing that I want to mention is also something that we call productivity paradox in management theory. And it explains exactly this stickiness of old technology that you're referring to. Because it tells you that, while a new technology might have much more potential, it takes a long time until it's more efficient than the old one. Also, you have to consider that many companies invested a lot of money in building up those infrastructures, and changing them from one day to the other, it's simply not going to happen. Biases, different ways of thinking. Then we are rather in something called adaptive stretch, where you pump a lot of money into existing systems to make them a little bit more efficient. Example of productivity paradox: when the electric motor was introduced to factory floors, right? It took 30 years until it was more efficient than the steam engine. Why? It was not that the technology was not mature enough, but that the thing was rather in operational or management. Because if you look at the factory floors, in the during the Industrial Revolution, there was one big steam engine at the top, and every workplace was powered by that. And what people tried to do is to replace that simply by an electric motor, and of course it was not as powerful. The electric motor was much more versatile, much more variable. So what it took was a new generation of managers who came and understood, okay, maybe we don't need a big electric motor at the top of the factory floor, but we need small ones at every workstation. And then it became better, it became more variable, more flexible, and at the end, much more efficient. But it takes its time, and that's what we're seeing today as well, such as blockchain or AI.
Now I want to go back one step. Talking about blockchain, you mentioned one thing that people think about cryptocurrencies when we talk about this technology, but it's just the base that everything else is built on. And now with quantum computing, there are some people believe that there might be a point when the security of those assets will be compromised. You speak anything about that?
Yeah, the hypothesis is because in cryptocurrency we're using so-called asymmetric cryptography, which is pretty much the standard encryption mechanism we use in all of our communications. So if you use your credit card at a terminal, this is pretty much the same. It's called SHA-256 encryption, which means basically the private key and a public key, and you can't work your way backwards, so you can't find the input variables. It's very difficult to break those codes. The idea is that quantum computing, because they will be multiple times more powerful than conventional computers, will be able to try to break those codes by brute force much more efficiently because they can plug in so many more values. I would say two things. On the one hand, first, this is still very, very far away, so we are not even close that, so I don't see this happening in the next 10, maybe not even 20 years. So quantum computing is really in its infancy, and big companies have been working on this, but it's very, very difficult. You have issues, you have to cool them, and so on. So it will take a lot of time until it matures. And the second thing is, if that happens, then basically our whole system will break. It's not just cryptocurrencies. It's a traditional, as I say, payment systems. It's communication. Your WhatsApp message, it's the same mechanism in the back. So I think that by the time we get quantum computers, we will have better encryption mechanisms. So I don't see the whole system breaking because overnight
it'll be in parallel probably. Exactly. Yeah, because I was listening to one podcast with Eric Schmidt. He mentioned that quantum computing is probably coming in about 10 years, so that's just what you said. But it's far away when we look at how technology is actually evolving every single day. So,
and when they say 10, it might be 20. Just look at Elon Musk's autopilot, and you will see that sometimes they're too optimistic.
True.
Yeah. On the other hand, humans are also bad at estimating exponential change, so it's very, very difficult to forecast this really the groundbreaking disruptive tech.
Now, speaking about blockchain, are there any apps that you know of, or something that we use on a daily basis that is based on blockchain and we're not even aware of it?
There's a lot of real life. So first of all, you'll be surprised to know how many companies are actually using blockchain. But usually it's used by corporations, so we benefit by the end products. To give you an example, trade finance. right? So trade finance, 90% of global commerce relies on it, right? So if I'm an exporter, I need to be able to see if the able to meet payments obligations and so on. So at the moment, there's many banks being involved, port authorities, regulators, logistics companies. So a traditional trade finance cycle takes about 2-3 weeks to settle. Costs you a small fortune to do that. And now you have consortia, which is partnerships of multiple banks and logistics companies and so on, that are putting this whole process basically on the blockchain, and this works excellent. So there's really a lot of things going on, but it's just not the very attractive stuff that you would read about in the media. Of course, there's some people as well using blockchain in their everyday life, but then they know it. So then they are aware of it. So if you're using blockchain to transfer money from one country to the other, no problem.
And what do you think is the reason why not many people have adopted this technology or know about it? Because we know that it's been for a long time around, and it's been a buzzword at one point. Everybody was talking about blockchain and Bitcoin, and mostly Bitcoin, Ethereum. But then it kind of started dying out. And now also, let's mention NFTs, also another thing, which was another crazy idea. Are these things going to stay? How do you see the future?
So I wouldn't agree that people are not using cryptocurrencies or crypto assets. So we have figures that they're not completely up to date, but it was 1 year ago or so, where we know that more than 300 million wallets exist, right? So 300 million people have cryptocurrencies or crypto assets. So it must not be currencies, but it could be NFTs or so, as you mentioned. So I believe that this is quite a significant user base, right? So if you remember, 50 million for the airplane took 68 years. So I think it's still a very big approach, and I think it's growing. We're not using it the way that Satoshi Nakamoto, the inventor of Bitcoin, had envisioned it, because it is not a payment instrument. Bitcoin can serve as a payment instrument, but if we're honest about it, it serves all of the three functions of money. It's not as good as at cash. It's not an efficient unit of measurement. It's not an efficient store of value, and it's not very accepted. So it's not really a means of acceptance. What it does a great job, however, is as an asset, as an investment asset. So many people there. Now, briefly to the NFTs. Yes, there was a hype. I agree, and the vast majority of NFTs sold were really not worth anything, which does not invalidate the technology, right? So, of course, you can draw some picture and sell it for $3 million, as many have done, or you can turn your first tweet into an NFT. But this is worthless, of course. So I think we would agree, just like might become worth something like a post stamp after 100 years, but this is just luck. However, NFTs you can use in future, for example, to have intellectual property rights being minted as have a virtual representation of your physical house, for example, minted as an NFT, which then later you could use in an automatic way, getting a securitized loan. So there's a lot of use cases. I think we're not quite there yet. We haven't yet quite figured out the most important use cases. But of course, I agree, the whole NFT cycle, of course, when you get such media buzz, of course, you get fraudsters and people who don't understand the technology or don't understand investing, they often burn themselves. Just one last thing, because less than 300 million wallets, I think that's a lot of users. We still can get much better, but we would need some clarity and better user experience.
Another question now, going to user experience and customer experience. I really love, I will paraphrase what Steve Jobs once said. Actually don't look at tech and what we have and then try to come up with a product, but we look at what the user wants and then work our way back to see what technology we can use. Now, having in mind all the technology which is present currently, and let's say keep it in the back of your mind, and can you think of any of the user experiences that we have today which are suboptimal and that could be improved by the fact that we're actually talking about now?
Yeah. I would even expand the quote by Steve Jobs. I think it's not only about user experience, it's about user needs, right? Mm-hmm. So user experience is important, but price is oftentimes more important. For example, I'll give you an example why I believe, especially for blockchain, this is relevant. If you're a migrant worker, and we know there are millions, maybe hundreds of millions of people doing that and sending money back home, right? So they work in a developed economy and send money back home. In the pre-blockchain age, they're paying about 7 to 10% in remittance costs, right? And which is a lot of money. If you're sending $100, and it makes all the difference for the people in Africa or some other developing nations, 7 to 10% is a lot. Now with blockchain, we can bring this down to 2%, 1%. Sometimes it's almost free, right? And it's instantaneous. I don't have to wait 2 weeks until the money arrives, right? So I don't know what happens to my relatives in this time. So people are willing to accept a very shitty customer experience to do that if the need is big. And I think this is where blockchain can make a difference. The same with institutional customers, right? So if I'm a bank, I have to transact millions of dollars every day with my corporate clients, partners in other countries. Sure, I might care about the interface, and I do care about it. But if I can save a lot of money by using a bad one, but have the money immediately and not pay any transaction fees, I would still take that solution. That being said, I agree with you that a lot of customer experience in the crypto and blockchain space is still not very good, and this is probably why we've hit this 300 million and not 2 billion or so. This is where we need a lot, because at the moment, the applications, and I think it's 99% of them, are really something that is specifically designed for pioneers, for tinkerers, for first movers, early adopters, but definitely not for the mainstream.
Yeah, this is something that can be seen even today with the hype, with all the AI things. Everybody's AI today. So much focus on the technology. Maybe too much talk about it to get finance, probably, from investors, but then getting about why you're even using that for the users. Now, I have another question. It's in your work and for your book and in your life, you've interviewed many investors, founders, regulators, bankers, and experts. So each of these groups have their own interests. For example, founders, they want to disrupt the monopolies of the big companies. The big companies, on the other hand, want to use this technology to protect themselves. Investors want to benefit from both parties, whoever wins. Regulators want to keep everyone playing fair, etc., etc. So where is the customer, and who would you say is working hardest to the benefit of the customers? Or will these benefits simply arrive as a byproduct of these different processes, each one trying to get the best?
Yeah. You mentioned it, and this was really a great privilege in interviewing for the book, because, usually I'm quite well connected in the banking sector, but so happy to interview, tech executives, politicians, regulators, people who were tech monopolies, as you say, investors who made millions, lost millions, and now they're on the hunt again for the next big thing. And it was still interesting to see that despite all of their angles, they said that, earlier about the financial sector, they said that it was going to be changed at a scale and pace never seen before in history. And all of them said it's the entry of big tech and its groundbreaking technologies. Put that two together, then it's very clear why it will be disrupted. I wouldn't say that they all have different, so of course they have different strategies, but I think all of them understand that payments was always, especially payments, was always a platform business. With the blockchain, this will get even much more important, right? It will get much more than just the movement of cash money. It will also be a central hub for digital identities, all kinds of assets. You mentioned NFTs, physical assets in a tokenized form. So they understand that whoever wins this platform wars, if you want, will be at the center of the new ecosystem and will have a significant impact on the economy. Now, they all have different strategies to get there, which makes absolutely sense, right? So if you look at Google and Amazon, they leveraging cloud computing, because that's where they're strong. That's why they are investing in blockchain as a service. Facebook, which is connecting people, it's also already very strong in platforms. They're right to use their users worldwide. If you look at startups, of course, they are trying to leverage that they are agile, right? They can try out a lot of different product setups, try to capture the market quickly, partner maybe with an established institution. Now, banks, of course, have it a little bit more difficult, especially in the US, where you don't have clear regulation telling them you're allowed to do that. So, of course, this is a little bit trickier. But I think whoever will get there only by providing the best product for the customer. This is the great beauty of the free market and of capitalism, that whoever has the best product wins, because at the end of the day, it's not the regulator telling you have to do this. It's not a company that has a monopoly that forces something on you, but at the end, you choose, right? And if it's something that's simple, easy to use, do it. And this is one of the big strengths of Apple, by the way. They're by far not the most innovative technology. And so, blockchain, I don't think that they have touched it at all, at least not publicly. However, they make, they take a checkings account, which is or savings account, which is one of the, most basic financial products that we have, but they make it so simple, so attractive that all of a sudden they have millions and millions of users within a day. And this is really fascinating to me.
Yeah, that's something that is fascinating, because their interest rates they're offering to these checking accounts are much lower than what people, if they had some financial literacy, would get secure by investing in other assets. But it's also very often convenience. Probably that's the key word. So now, speaking about the companies, you mentioned Apple. What are the best examples of companies that mastered and are using these technologies to drive growth?
Mm-hmm. Yeah. So I would say there's a lot of banks, or basically all of the big banks are somehow involved in blockchain projects, and many of them are already making things much more efficient. Just to give you an example, syndicated lending. So when a lot of banks get together and provide loans for infrastructure projects, for example, or for corporations, this has been also a mess before blockchain, right? Because all 100 people all of the times, access back and forth. Nobody knows what's going on. The blockchain, you simply have a transparent ledger, right? Everybody has reading rights. Some nodes, some participants have editing rights. So this is very, very clean, very simple. If you look at tech companies, they are also, as I said, approaching it in a different way. So Google and Amazon are providing blockchain as a service. So every company basically that wants to use blockchain, they don't have to set it up themselves. They don't have to tinker with the code. They rent resources managed by Amazon or Google. Look at China. We have Tencent, for example, which is the equivalent of Facebook. So it's the social media giant of the country. They have built in Hong Kong a virtual blockchain-based bank, which is providing supply chain finance, which has nothing to do with their core business, right? So this is really going after another segment. Alibaba, which is the Amazon of China, is providing, migrant workers the possibility to have cross-border payments for nothing. It's also using blockchain for donation tracking. So there's a lot of different things. Telecommunication companies using it with each other to have some roaming agreements, right? So if you were at Telefonica in Spain and you go to the UK to use Vodafone, those two companies would have an agreement and settling everything by themselves in a very simplistic and efficient way. So it really depends on the corporation and how they can use it. And oftentimes it makes sense to do it. Sometimes it does not. Sometimes it's more a PR stunt. But you would be surprised how many corporations are already using this without, publicly being.
So you're saying, if I understand correctly, anyone can build on blockchain. Everything, the infrastructure is there. So if I decide tomorrow to go build a company and say, I think this technology could solve some problem, I could just go to Google, Amazon, sign up. How does it work?
Yeah, so the tricky thing is to find the right problems, right? Because in many cases, a traditional database would be much, much cheaper, right, than a blockchain. However, if you have a good idea, of course you can, because that's the way that startups do it. So regardless whether they're in the blockchain space or not, no startup will put their own servers in the basement, right? This is not the 1990s anymore. Everybody will start at least by renting out resources at one of those two data centers. There are some smaller ones, but usually it's either Amazon or Google. And then if you're having of course, you have different kinds of levels, right? So you can just rent the hardware. If you can then build your own code, write your own code. Otherwise, you can already use a lot of models that are there. And I mean, of course, some kind of technical skills, but at least you don't have to start.
Okay, there is another concept that's very, very interesting to me, and that's Web3. This is something also. And can you speak to Web3? Tell us what it's all about, because what it seems to be promising is for users to get back control over their data. Is that even true? Is that even something users really want or care about?
Yes, it's an excellent question. Yes. Well, you should have it. First of all, let's clarify. So basically, Web3 is often or always mentioned in comparison with the metaverse, right? So the metaverse, that's an idea that has been floated in 1992 in Snow Crash, which is a science fiction novel. And basically, what it says is that we have a virtual world in which we can all join together and interact with each other. I think we've had this for a number of years now, especially the gaming community, right? Those online gamers, they could talk to each other, interact, and so on. Now, it got into the media some time ago when Mark Zuckerberg announced that he is pivoting towards the metaverse, right? That's why he renamed his holding company to Meta instead of Facebook. And since then, it has kind of fizzled out, right? The metaverse, because people mentioned NFTs, right? So they were buying virtual real estate in the form of NFTs, and it was not. Now, Web3, on the other hand, is the infrastructure, right? So you can build all kinds of metaverses, but Web3 is, in theory at least, a decentralized infrastructure where you don't have this walled garden approach, where you don't have one company telling you, okay, I am in control of your assets and I will grant you access to it when you sign up and so on. Today, of course, you can play a video game and you can buy something, but at the end of the day, it's the platform running this game that can read it or take it from you. If in the case of Web3, for example, would have it registered on the blockchain, nobody can take that away from you. Also, you could take this asset, let's say it's some clothing for your avatar, you could take that to another metaverse. User autonomy is really at the center of all of this. But your question whether we want it is really also highly important because at the end of the day, nobody would, or at least, for certain assets, I wouldn't like it to be completely centralized. If I have the proof of ownership for my house, for example, just as a private key, I wouldn't feel very comfortable, right? So I'm much, much happier if it's somewhere in a land registry where I can, prove it via my identity all the time if I lose my password. That's pretty much, I would say that we can have customer autonomy. It's important to have this, that it's not run by one central authority, the Web3, but it's run by either decentralized organizations or by people themselves.
So it would be practically, in simple terms, our own profile, and the playing ground is blockchain itself. It's not a platform, a simple platform.
Correct.
Let's say. Correct. Yeah.
Correct. Maybe just to understand it historically, we had something called Web 1, where we already had a decentralized world, right? So you have your own servers, you build your own websites, you build your own online shop, whatever. And then in the wave of Web 2, we had these big centralizers. You had Amazon, right? If you had a shop, you went to Amazon. If you wanted to sell something, to build a website, you went to these website aggregators, right? So you had companies that made modules for you and so on. So it was very simple. You didn't have to code anything. So there were a lot of different. WordPress was the company I was looking for. So you basically were going to WordPress. You wanted to outsource your service, you went to Google and put it to them. So this basically enabled a lot of big tech companies to grow, right? Because now with Web3, it's the question whether we want this convenience to stay, whether we want to trust those centralized companies, or whether we want to take it back and at the other hand give something back of our autonomy. And it's always this double-edged sword. So I think there is no right or wrong in this one. It's always something that will have to be balanced.
Perfect. So Igor, I would like you now to tell our audience where they can buy your book, where they can find you. I believe you also provide consulting to the companies who...
Yeah, so basically the book can be found in all major bookstores. Amazon, of course. I trust that the audience can Google, so they can check out my website, and basically they will find all of the relevant information there.
So it's igorpejic.net.
Correct, yes, igorpejic.net.
So, and the books are, the new book is Big Tech in Finance, so that, and the previous one was Blockchain Babel. Tell us just which awards you actually received for that book, which was published in 2019.
Yeah, correct. So it won the Independent Press Award for the Best Technology Book of the Year. In the finals of the Breckenbauer Prize, which is awarded by McKinsey and Financial Times. And it was a Financial Times Business Book of the Month. This is
Heard it.
Thank you so very much.